One of the questions I get asked all the time is about naked puts and how do I roll them. So today we're talking specifically about rolling naked puts. Hey everyone, welcome back to Drawbridge Finance. My name's Levi Woods. This is an opinion channel about money, not offering financial advice in any way, shape, or form. And today I want to talk about naked puts because there's two different strategies that I use for naked puts. One of them is a position where I want to eventually purchase stock. The other time that I will sell a naked put is when I just want to make profit off of selling the option, but I have absolutely no intention of owning the stock. There's a very specific reason that I bring that up because it affects my decision as to when or how I roll my naked puts, if I roll them. Now, to be clear, when I'm making a roll, I'm actually closing the current position that I'm in, and I'm taking usually a capital loss for that position. I am then opening a new trade. For this reason, I almost never adjust the strike price of my naked put option. Now, I hear people say all the time, well, I'm going to roll this up or roll it down. And to me, it just doesn't make any sense at all. And the reason is because of the math. First of all, I want to talk about a position where my intent is to actually own the shares of the stock that I'm trading the put option on. Now, if that's my intent, I have purposely chosen an option strike price that is at a level that's acceptable for me to be buying it. Because if I was choosing a level that was too high, then that was a trade I shouldn't have entered in the first place. So I can't go back in time, but when I put on those trades, I am making the decision to purchase the stock at that price. Now, it doesn't mean that I necessarily want to buy it at the end of that particular contract period. I might want to buy it at a future date for that agreed price. So this is why I would never roll down to a lower price and I would never roll up to a higher price. If I was rolling up to a higher price, that would be putting on a completely new trade. And if I was rolling down, I would be negating the position that I originally put on and changing my assumption. Now, I'm not saying that's wrong, it's just something that I don't do. If I decide to purchase a stock at a certain price, I'm gonna stick to that. It's the same way I look at dividend investing. When I purchase a stock, I make sure I'm buying it at a correct valuation. So now I want to look at a position right now. Let's talk about Suncor. I've got a naked 18 put on right now. My intent is to buy 100 shares of stock for $18 per share. The stock is trading below 18 right now, so I could roll down to a 16 strike. It doesn't make much sense at all. The 16 strike doesn't have a very high delta value in comparison to the 18 put. So if I roll out to September, and from August to September, I'm going to be taking a loss on my August position. I'm going to be making some additional credit that's going to exceed my loss on the September position, and I'm going to be net credit. What this does is it allows me to reduce my cost basis further. I'm still going to be buying the stock at 18 bucks, but I can just continue to roll and roll and roll every single month, even when the stock is trading and the put positions are in the money. Not really where I want to be. Now, in the event that that stock was trading much higher, I wouldn't be rolling up. That would be putting on a new position. I would just close out my short put for the capital gain, be happy with the trade, and then I would look for a brand new trade to enter. I would not be considering that a roll in my portfolio. A roll specifically is a defensive position. Does that make sense to everybody? Now, the second scenario is when I want to just make money off of trading options. Now, this, generally speaking, I don't actually roll these positions very often. If my intent is not to buy stock, if my intent is only purely for profit selling the naked puts, I just close when the option price hits my exit strategy. And that is why I always have an exit strategy on entry. I can't stand when people enter trades and they have no idea what they're doing with that trade. It's like when you put something on in order to make money, you have to have a closing plan, whether that's on the positive side or the negative side. Now, I hope that gives you some insight into my thought process on rolling a position. because the whole goal of this channel is for us to get rich together. Now, if you're interested in chatting with me directly, come on over to Discord, check out my Patreon page, and we can chat if you've got questions. Thanks so much for watching, and I'll see you very soon. Let's get rich together.